You are welcome back to my channel. My name still remains Lukman, and today I want to quickly show you a simple trick to make money in Forex, especially if you are a beginner. And I want to tell you straight off that the trick to making money in the Forex market for beginner is to trade it simple. That means any strategy you want to trade must be very simple. And I don't want you to make the mistake of believing that something that is simple is not effective. Simplicity is the watchword to making money in Forex. The more simple, the better. If it is simple, then you'll be able to execute it properly. And by simple, I mean that it's not going to have so many rules, just few rules, so that as a beginner, you'll be able to do it. If it's something you're interested in, then let's get into it. Okay, you are welcome back. If you are new to this channel, consider subscribing. Just hit the subscribe button. It doesn't cost you anything to subscribe. Hit the subscribe button and press the notification bell so that when next I release good videos like this, you'll be the first to be notified. And if you are returning G, you have already subscribed, just click on the like button and share this video to so many people. So let's get into it. We are going to be needing two moving averages for these strategies, this simple strategy, and it doesn't cost us more than these two moving averages. And as usual, you are going to be working with a MetaTrader 4. So you are on my chart. This is my chart, and you can see it's so plain. The red candle is showing sell, while the green candle is showing buy. But there is nothing to show as a beginner. You can't really understand what is going on. But the simple trick I want to show you will show you when to go long and when to go short. That means when to buy and when to sell. Without, you don't need anybody to tell you this. So let's get into it. The first thing to do, I told you are going to be using two moving averages. So this is what you are going to do. You know the usual place where we set our moving averages, where we set our indicator. That is the F sign, where you have the F sign like this. Just click on it. Once you click on that, you'll be confronted with this. So this is what you do. Just, you see the moving average, average directional, Bollinger Band, envelope, then moving average. Just click on this moving average, this one, moving average. So once you click on the moving average, this is what you are going to have. The period is going to be 5. We are going to be using 5. Now you have 5 there. The shift is going to be 1. Then the method, if you click on that small arrow in the method, you see exponential, smoothed, linear. It's not going to be simple. It's not exponential. Make it smooth. So it's going to be smoothed moving average. Then apply to, let's change this one to, instead of the low, you say the high. Please make sure you do it according to, you can watch this video as many times as possible, because it's going to help you a lot, though it is very simple. Then the star, just leave it at 2 pixel. Then level, just leave it as it is. Then the color is going to be yellow. Just pick the yellow. Just pick the yellow. This is the yellow. This is very close to yellow. This is my yellow. I just pick this as my yellow. So you pick yellow and you say done. Once you see done, that's you see the moving average is the yellow one. Then you do the second one. You follow the process again. Click on that F sign. Then click on this F plus. Also pick on moving average. Once you click on the moving average, you are still going to use period 5, shift 1, method smoothed, then apply to, instead of high, you apply to low. Just apply this to low. Click on this and apply to low. The first one, was high. This one is low. Then the star is the same. The level is the same. Then you are going to use the same color, still the same yellow. Then click on done. So you can see you have two moving averages. One is set to smoothed moving average. One is set to high, the other one is set to low. But so some people call this the yellow channel, some people call it the price channel, some people call it yellow brick wall. So anyhow you call it, it is that. And this is the strategy. You can see this is the channel that you have. You can see How do you work with this? It's very simple. You know, in forex trading, forex is traded simultaneously. You buy and you sell. So we want to look for, first we'll study how it works for buying and how it works for selling. That means if you want to go long or you go short, what are those things that you are going to look out for? Simple. You can see this is the rule. Whenever you see the price, and by the price I mean the candle, whenever you see the candle or the price below this yellow channel, below this yellow brick wall, then it's telling you to sell. You can see, you can see, you can see, you can see it's pointing down. It's pointing down because the price, the candles are below the channel. They are below the channel. Now, let's move ahead. Let me show you another example. Let me show you other examples. Now, if you see the price is above the yellow channel, then it is buy. Look at this. Look at what we have here. Look at what you have here. Look at what we have here. This price is above the channel, and you can see it's trending up. It's trending up. It's trending up. Even look at here. Look at this point where the thing entered the channel. It still bounce back and still move up. It's a very simple thing. Even looking at it, you don't need to be told. No, you don't need a crystal ball to tell you that the direction of the market. If you are not comfortable with the uh higher time frame, like we are in the H4 now, you can go to H1. Just click on the H1, the 1 hour. You can see it's still the same thing. You can see here, you can see. So you can now change it. You can change it to 30 minutes or 15 minutes, as the case may be. So it will still give you the same thing. You can see this one very long because the price is below the channel. Once it is below the channel, it's telling you to do what? It's telling you to sell. You can see this one sold from here. From here to here, you will have gained about 50 or 70 pips or thereabout. So you can use this simple strategy. You can use it for scalping. If you want to use it for scalping, then you have to go to the lower time frame from, let's say, 1 or 5 or 15 minutes. Those are the lower time frame. You can use it for scalping. But if you want to use it on a higher time frame, you go to 1 hour, 4 hour. Then higher time frame will give you more pips to capture. But we are using a scalping strategy. All you need is you are targeting like 10 to 20 pips, and it is very straightforward. It is doable. You can see from year to year is more than, this one is more than, even from year to year it is more than 50 pips. So you can capture like 10 or 20 and you should be okay if you are scalping. But normally I use this strategy not for scalping, because there is no point but you are a beginner, because I make a lot of money from it. But you are a beginner, you can always use it for scalping. Just look at this place, just this little place. Just look at it. Just look at it. Look at it. You can enter here. You see, you can enter here. You can enter here. If you had enter here and close here, you will have gained more than 100 pips from this little move if you are on higher time frame. But if you are on this frame, then you will have gained like 60 or thereabout pips. So you can work. Now, what are the rules again? The rules are simple. If the prices are above the channel, then you are buying, you are going long, you have to buy. If the prices are below the channel, are below the channel, are below the channel, then like this, then you are doing what? You are selling. But if you see, anytime that you see that the candles or the prices are inside the channel, they are inside the channel, you can see like here, like these ones, they are inside the channel. It's better not to trade. And if you are already trading and you find out that the price have entered the channel, it's better you exit your trade. That means you are in another, the price is about to change. So If you are trading long and you realize that the price is now moving back inside the yellow channel, then it's time for you to exit that trade and keep the little profit you have made. And anytime, if you want to enter and you realize, maybe you are at this present time and you realize the candles are inside the channel, it's better not to trade at all. Just wait. There are so many opportunities. If you cannot wait, then look for other pairs to trade. We are on Euro USD. You can look for other. You can trade GPP. You can use this simple trick for any pair at all. For any pair at all, you can use it. But I will advise you, as a beginner, just limit the pair you trade to like 2. When you now master the 2, you can now move ahead. Then again, as a beginner, run away from trading the high volatility market, like the gold, the Bitcoin, and the rest, because they can do away with your money. They can blow your account easily, because the volatility is so high. So you can just start with 1 or 2 pairs, master it, then move along. We can see, look at this long movement, because the prices are above this is a very good example, because the prices here are above the channel. You can see they are outside the channel, and it is going up until when it starts entering inside the channel. So you can exit your trade somewhere around here. If you notice, you can exit your trade somewhere around here, and you are good to go. You will have made a lot of profit, and you can continue to look for opportunities throughout the day. Forex is traded 24 hours in 5 days, so you can look for opportunities every now and then. But I will advise you, any strategy you want to try, you have to try with your demo. Don't use your real account first. Try with your demo, get comfortable with it, then you can start trading with your live account. I want to remind you again that I have done a video where I teach you how to calculate your take loss and stop profit, and where to place your take loss, how to take your stop loss and take profit. So if you are trading this strategy, know that you must apply the stop loss and take profit. It's very, very important, so that it gives you that rest of mind. So if you have not watched that video, I will say you want to go and watch the video, so because you are going to apply your stop loss and take profit to this strategy. You cannot trade this strategy alone. Any trade that you want to take, you must have a stop loss, because if you don't have a stop loss, you might get your account blown. The best way to protect yourself is to have a stop loss and to have your take profit, because in forex trading, risk management is the most important. All these I'm teaching you are basic, but the most important are the risk. So you have to use your trade stop loss and take profit. If you have got value from this video, which I know you must have gotten, please consider subscribing. Just subscribe. Subscription will not cost you anything. Just click on the red button, subscribe, and a bell will come out. Just click on the bell, so that you'll be notified whenever I release new video. And if you have subscribed before, just click the like button, like this, comment, then share. And if you are subscribing new, just go to the comment box, write I have subscribed, and I will quickly acknowledge and give you a good gift that you can be using in your trading. Until I come your way again, remain financially smart, and don't forget, we can succeed together. Thank you.